Now we can speak to Ketsia Rust from the Centre of Affordable Housing Finance in Africa. Here's that conversation.
The African Development Bank had said that 20% of Africa's population earns more than $20 a day. So it's not necessarily so that all of those people could afford a mortgage, but if they're earning a formal income, presumably over time they could, if our mortgage systems became sufficiently sophisticated to meet them. The World Bank has estimated that about 3% of households across the continent can access mortgages, and we're not meeting that right now. We're not even close to it. We have, in a country like Kenya, where you've got it looks from the press like the mortgage market is flying, they had about 16,000 mortgages last year, total for the whole country. So our mortgage markets in Africa are tiny. But that does mean that there's a lot of space for growth, even in a small segment of the population that might afford it. Now, you spoke about titling. Titling absolutely is critical. A mortgage will not work if there isn't title. Not the mortgages as we understand them. Needs land that can be secured and used as security, and also a property market where that security is meaningful. A lot of countries are working on this right now, and they are instituting programs either with support, some of them from the World Bank and others independently, to build deeds registry systems. And in some ways, because they're starting now, they have the benefits. They're jumping straight into the automation and computerized systems, and they're not writing it down on cards. So that's an evolving system. I think Rwanda's deeds registry system, it went so quickly. So over time, the deeds issue will become less and less of an issue. It is an issue in places like urban Malawi, as Malawi's cities start to grow and meet the border of tribal areas. But there are processes of negotiation about how do you deal with tribal tenure versus traditional tenure versus title. So I think that's a process that is overcoming. There are different ways in which governments can start to support the growth of their mortgage markets. And one way which I think is very interesting, and the World Bank has been supporting this, is by creating liquidity facilities. So a lot of countries, the banks claim that they can't get enough long-term money to support a long-term mortgage. And so there isn't sufficient liquidity in the country. And the establishment of liquidity facilities in Egypt and in Tanzania, and now they're working on one in Nigeria as well, can really change it. Egypt's was started in 2006, and since then their mortgage market has doubled every year. And I can't remember, 30,000, mortgages last year in Egypt. So liquidity facilities is one. To extend it further down market, there are interesting guarantee schemes that are offered for people to help manage people with erratic incomes, who maybe don't have formal, regular month-by-month income, but it's seasonal, or they may be informally employed, but gainfully so. So guarantee mechanisms can help banks extend into that market. And then in addition to that, the Home Finance Guarantors Africa is this new NGO that's been working in a number of countries, providing collateral replacement guarantees to help people who don't have deposits then access a mortgage.
Now, what about the other side of the coin, the developers and the products that they're putting out into the market?
Yes.
How do developers and financiers need to work together in order to penetrate this market?
Absolutely. I mean, a really important thing here is we need cheaper houses. And in fact, we need 1/3 participant in this relationship that you've described. We also need government, local government, because the standards set by local government for what a house looks like and what the minimum standard is, and then the standards imposed by the mortgage lender of what they will underwrite, and then what the developer then goes and builds. Those three need to work together. And at this stage in our mortgage market development, that means conversation, and a lot of it in different countries. The developers also they can only raise capital to do the development if they know that there's end user finance to sell the units in the long time. So you have to be able to have both construction finance and the mortgage at the end of the day. And sometimes lenders can start to bridge that gap themselves, playing both roles.
Let's talk about the role of microfinancing in this whole mortgage market. Where do you see it?
Okay, microfinancing in the housing market is critical. For the population that is not able to either afford a mortgage or who can't access it because their title is insecure, housing microfinance becomes a really interesting option. It is not secured with the land, and so it can be offered, because it's a smaller loan, it doesn't require the land security. It can be offered to households who cannot access a mortgage. It's a smaller loan, so they can't buy a whole house with it. They have to use it for home improvements or incrementally building their home over time. The difficulty is that when a microlender offers a microloan for housing purposes, if they define the risk structure of that loan by the fact that it's building something permanent, that it's building an asset, then they also need to rely on the fact that that house is well built. Because if it falls down, they might as well have been financing groceries. It's no longer a permanent asset. So it's very important that you have a supply side that can ensure that that house is well built. Something as simple as the mix of sand to cement when doing a brick and mortar house. If you have too much sand, with the next rainstorm the house will fall down. So the microlender has to start caring about the technical specifications of the house that's being built, and that's often a big challenge for microlenders. What's quite interesting is that there's a whole new area that's developing across southern Africa, in fact the whole of Africa, that's looking at housing support services that provide the technical capacity and construction technical assistance to help borrowers build good houses, even with small loans. The beauty of a microloan is that it's financed, because it's a short term, it's not amortized over a long period, which means in fact that the finance charge of the loan is much smaller. So it can in fact, even with a higher interest rate, be
That was Ketsia Rust from the Centre of Affordable Housing Finance in Africa.